IFRS 16 Leases. Introduction. IAS 17 Leases has been replaced with IFRS 16 Leases, which was issued by the International Accounting Standards Board in January 2016, with an effective date of 1 January 2019. IFRS 16 introduces a single lessee accounting model compared to the dual model that was used in IAS 17. In IAS 17, leases were classified in the books of the lessee as either finance leases or operating leases, and this was treated differently by a lessee. In other words, there is no longer a distinction made between finance leases and operating leases from the perspective of the lessee. IFRS 16 now requires the lessee to recognize assets and liabilities for most of its leases, thus realizing the IASB's goal of bringing nearly all leases onto the lessee's statement of financial position. The model applied to lessor accounting in IFRS 16 remain largely unchanged from that required by the existing standard IAS 17. A dual model is still applied where the lessor needs to classify its leases as either a finance lease or an operating lease. An entity requires the use or access to certain assets for its business activities. Sometimes the acquisition of these assets are financed out of available cash resources. In this paragraph, other sources of financing are also identified. Those are some that you are familiar with. For instance, bank overdraft, trade creditors, the issue of the company's own debentures, or the issue of its own shares for purposes of raising the necessary funds. Another form of financing, however, that an entity can make use of is to enter into lease agreements with another party, being the lessor. By entering into such agreements, the entity will obtain the use and in some cases even ownership of the asset in exchange for making predetermined payments to the lessor for a specified period of time. The need to have access to immediate funding for the total purchase price to acquire these assets is also overcome by entering into such arrangements. The objective of IFRS 16 is found in paragraph 1 to 2. This standard sets out the principles for the accounting treatment of leases. As you know, accounting treatment comprises recognition, measurement, presentation, and disclosure. Under both recognition and measurement, we will again look at the initial stages as well as the subsequent stages. The objective of IFRS 16 links to the objective of general purpose financial reporting as set out in the conceptual framework, whereby lessees and lessors should provide relevant information in a manner that faithfully represents those transactions. For purposes of the application of the requirements of IFRS 16, it is important to be able to identify a lease. Guidance on this is provided in paragraph 9 to 17. It reads, "At inception of a contract, an entity shall assess whether that contract is or contains a lease." Now, when would that contract contain a lease? A contract is or contains a lease if the contract conveys the right to control the use of an underlying asset for a period of time in exchange for specific consideration. So where you have a contract where there's two parties involved, the one party has the right to control the use of an underlying asset, but in exchange needs to pay the other party consideration for that right, we can conclude that we have a lease. If we conclude that the contract is a lease, we have to apply the requirements of IFRS 16. To further understand these paragraphs, I refer you to Appendix A of IFRS 16 and specifically the following key terminology. I will only look at a few of that. Please refer to all these key terminologies. This is an extract from Appendix A of IFRS 16 where you will find all your key terminology. The decision whether the contract contains a lease must be made at inception date. Inception date of the lease is defined as the earlier of the date of the lease agreement and the date of commitment by the parties to the principal terms and conditions of the lease. At this date, the earlier of the two, you need to make the decision whether the contract is a lease. The definition of underlying asset is given in Appendix A as an asset that is the subject of a lease for which the right to use that asset has been provided by a lessor to a lessee. For FRK 201 purposes, it will always be assumed that the contract is a lease in terms of IFRS 16, in which case the principles of IFRS 16 would have to be applied to that transaction. The next section that we're going to look at is paragraph 12 to 17 of IFRS 16, dealing with the concept of separating components of a contract. As we saw and in the definition of the identification of a lease, there is a contract between a lessee and lessor where the lessee has the right to use the asset in exchange for the payment of consideration to the lessor. Now that payment that we're going to look at now sometimes includes more than one component. And now IFRS 16 paragraph 12 to 17 says you have to account for each lease component within a lease contract separately. The consideration, the payment that the lessee makes to the lessor in the contract, that each of those payments needs to be split between a lease component and a non-lease component based on the standalone price of the lease components. The separation of the lease components from any non-lease components will result in the non-lease components being accounted for by applying other applicable standards. Ultimately, the principle we're looking at in these paragraphs is to identify the payment portion that purely relates to the lease. Any non-lease component contained in that payment needs to be split out and dealt with separately. An example that you'll find in practice is that the lessee pays an amount monthly to the lessor, but that payment is for, firstly, the right to use the asset, but secondly, also to cover some maintenance expenditure on that underlying asset. Then this paragraph says that payment needs to be split out between the portion purely relating to the lease of the underlying asset and any other non-lease components. The other non-lease components will then be accounted for as an expense. However, under paragraph 15, the lessee has the option to elect what we call the practical expedient. When the lessee elects the practical expedient, the lessee do not have to separate the lease components from the non-lease components, but account for all of it as one single lease component. In a question, we would very specifically have to mention when the lessee has elected this practical expedient. Please note The practical experience is not available to the lessor. Class example 1 will illustrate this principle. Abbey Limited entered into a 5-year lease contract with Cody. In terms of the lease contract, Cody Limited will provide the right to use of a manufacturing plant to Abbey Limited. So what do we have here? Cody is the lessor, Abbey is the lessee, and the contract is a lease per IFRS 16 because it's mentioned in the question. Therefore, we need to apply IFRS 16. Cody Limited, the lessor, will provide maintenance services for this manufacturing plant, the underlying asset. The annual lease payment applicable to this contract amounts to 200,000. So that is the payment that Abbey will make to Cody. Of this 200,000, 20,000 relates to maintenance services. So when you see this in a question, immediately you will identify that I have one payment, but I have a lease and a non-lease component contained in the one payment. The paragraphs that we just looked at said you have to split that payment out into what relates to the lease and what is non-lease. But we need more information, as the standard says you need to split it out based on the stand-alone price of that non-lease component. Abbey Limited therefore establishes that similar maintenance services are provided by third parties at 25,000 Rand per year. So the standalone price of the non-lease component is the 25,000. Abbey Limited does not elect to apply the practical experience. Therefore, you have to split the payment between lease and non-lease. If Abbey elected to apply the practical experience, the full 200,000 would have been used for purposes of accounting the lease component. So in calculation of the lease liability, the payment amount that we will have to use will be the 200,000 total payment, excluding the standalone price of the non-lease component relating to the maintenance services. So in your financial calculator, you'll use the 175,000 as your payment input, and the 25,000 Rand will be dealt with as an expense whenever it is incurred by Abbey Limited. IFRS 16 also refers to the lease term, and it is very important to correctly identify the lease term, since the payment over the lease term will be used to measure the lease liability in the books of the lessee or the investment in the lease in the books of the lessor. So for purposes of determining the lease term, let's have a look at class example 2. Bobby Limited enters into a non-cancelable lease with a lessor to lease a delivery vehicle. The initial lease term during which Bobby Limited will have the right to use the vehicle is 2 years. But Bobby Limited has an option to extend this lease for a further 2-year period. The annual lease payment will be the same in the extension period. At commencement date, Bobby Limited has significant economic incentive to exercise the extension option. So it will be to his benefit to actually exercise this option. And therefore, it's reasonably certain that Bobby will exercise this option. If that's the case, you'll use the term would be 4 years. So that is your N that you'll input into your financial calculator. If, however, Bobby did not have any significant economic incentive to exercise this extension option, we would conclude that it's not reasonably certain that Bobby will exercise the option. And if that's the case, you would have used 2 years as your N in your variables in the financial calculator.